I've just done a new research report on why stocks are into all-time highs. I see a lot of investors are confused as to why we got so much geopolitical uncertainty, we're facing high interest rates, and there's just so many factors that are hindering stocks being at all-time highs. But here we are. We've got S&P into highs, we've got AI stocks doing well, tech stocks doing well. And I want to explain to you why this is the case and how we can get positioned and things that we should be looking out for coming into the near future. So I'm in Jakarta, Indonesia right now. I've just managed to set up my new workplace, and let me quickly dive into this research report and I'll see you guys now. So why are stocks at all-time highs? I think we've had this dilemma over the last couple of weeks and months. We've got more geopolitical uncertainty. We have the Rand war. We've got the energy crisis, inflationary pressure. We've got interest rates that are high, and stocks just keep soaring. So this research report is just giving you a better understanding as to what's driving the markets today. So what I'm trying to do in this report is just giving you a fundamental truth to understand that markets are forward-looking mechanisms that price future expectations and not today's headlines, which is important because we all think, oh, well, stocks are into highs because of what's happening now, but that's not the case. Stocks are into highs because what could be happening in the future. And stocks are into all-time highs now, not because risk has disappeared, but more so because investors currently believe that future earnings growth for companies will outweigh those risks, which is quite interesting. So building for multiple outcomes. I think this is the most important piece of good portfolio construction. It's not about one perfect prediction, but it's more about preparing for multiple possible outcomes. And I think that's what's most important, is that I'm not too worried about what happens. My portfolio is positioned for the worst case scenario and the best case scenario simultaneously. So the goal here isn't to predict the future perfectly. The goal is to build a portfolio that doesn't require being perfectly right all the time. Now, I think a lot of people want to have certainty over their portfolio. The strongest portfolios, my friend, are built around resilience and not certainty. Resilient portfolios should not depend on things like having one stock or one sector or one economic outcome. I've done multiple portfolio reviews, and I just see everybody thinks they're diversified because they've bought 6, 7, 8, 9, 10, 20 different stocks. But if you're buying 10 different stocks in the same sector, you're still not diversified. You're still solely relying on that one sector to perform. If that sector underperforms, your whole portfolio is going to go back. I've typically seen that investor psychology, when headlines hits and there's fear in the market and there's many things going on, that we tend to want to make short-term decisions and we want to make short-term rebalances, and we just want to do things more often because the headlines seem busy. So naturally, we as investors want to seem busy too, but that's just not the case. We need to keep that long-term thinking and long-term goal in mind. The news can be a noisy place, and it's important to have somebody like myself that can take all the noise and compile it into the most relevant information to be paying attention to, which then you can make objective decisions as opposed to trying to make decision based on every single headline. Why can markets rise despite bad news? Because investors frequently confuse current events with future expectations. Markets are constantly attempting to discount future outcomes before they happen. So headlines will tell us what happened yesterday, where markets will tell us what investors expect to happen tomorrow. So this disconnect explains exactly why markets often behave differently from news cycles. And that's why it's just so dangerous to be paying attention to headlines and news if you don't understand macro properly and how to use it in a portfolio and part of an investment thesis. You're just going to be reacting to every headline, and that's going to have a disconnect to what price action is actually doing. So what's actually driving the market right now? We've got investors looking at the S&P 500 reaching all-time highs. Many assume that the entire market is performing equally well, and this can also be deeply misleading. And a relatively small group of mega cap tech stocks and companies have been responsible for a large share of the market gain. I think the facts were something along the lines of, I think it was 7 stocks in the S&P 500 contribute to 80% of the growth or something like that. So there's a key concept here. It's called market concentration versus market breadth. And strong index performance does not always mean broad market strength. Now, why is it that we got 7 or 8 stocks driving the whole S&P 500 growth? Well, this is it here. If you have a look at the Mag 7 stocks, so understanding market concentration and index weighting, a handful of Mag 7 large cap tech companies are driving a majority portion of the overall market returns right now. And this raises an important question for every investor: is what's actually the narrative that's driving the market and what am I actually investing in? Everybody's dollar cost averaging the S&P and thinking the market's doing really well, but maybe the broad market isn't actually doing well. Maybe it's just a certain sector that's holding current dominance. So this is where we get into the AI capital allocation cycle. And I'm sure a lot of you guys know that we're in an AI boom at the moment. AI is becoming one of the most important investment themes. We've got AI that's attracting an enormous amount of capital flows despite the broader economic concerns. This is representing one of the largest capital allocation cycles of the decade. Now, some of the key drivers are things like AI adoption, energy demand, cloud infrastructure, data center expansion, semiconductors. These stocks are doing tremendously well, and these are the stocks that are carrying dominance in the S&P 500, which is dragging the whole index higher, and that's because of one theme, and that's AI. So I hope you guys managed to get a little takeaway from this research report. Of course, we do a lot of research based on different sectors, based on narratives, portfolio construction, what we expect, how we're positioning. So if you're an investor right now and you feel that maybe there's just too much information out there, you feel like you're just struggling to navigate yourself around the financial markets right now, you have capital, you want to allocate, you want to build up some yield, you just don't know what to do, or you're focused on just downside protection. Maybe there's too much information there for you to make a decision and you're kind of sitting on the fence here. Book a call down below. I'm more than happy to help. I can guide you into the right direction. If you want more information on the research that we're doing, every single day we do research, get insights on my exact portfolio, how I'm getting positioned over the next 6 months. I think we're going to be in a pretty strong run here, and either you're going to get left behind or you're going to capitalize. And it's the guys that have the right information that are going to be making money, not the guys that have too much information and end up sitting on the sidelines and not making any decision. If you guys need some help building up a portfolio for yourself, you don't know what to invest in, book a call down below and I'll help you guys out. Cheers.